Welcome back to the channel. Today we are conducting an extensive deep dive into Micron Technology's Q1 2026 earnings results. As a global leader in memory and storage solutions, Micron's performance is a critical indicator of the broader AI hardware and semiconductor cycle. With the stock recently hitting significant price targets and analysts adjusting their multi-year forecasts, there is much for MU investors to understand. Before we break down these detailed financial tables and charts, please like this video and subscribe to the channel for more institutional-grade market analysis. Let's get into the Micron report. We begin with Micron Technology's current market standing on the Nasdaq. As of the latest reporting, MU is trading at $389.32, marking a very strong intraday gain of over 5%. This 5.14% move reflects a high degree of confidence following the recent earnings announcement. The chart highlights the significant upward momentum the stock is currently enjoying, adding $19 in a single session. This snapshot provides the essential context as we transition from price action into the fundamental financial statements. Understanding the current market valuation is vital as we analyze the underlying revenue and profit data that will likely dictate the next major leg of movement for this semiconductor leader. As a key component of many technology indices, Micron's performance here often sets the tone for the entire memory and AI infrastructure space. Diving into the key facts and corporate structure, Micron currently maintains a massive market capitalization of $438.18 billion. Founded in 1978 and led by CEO Sanjay Mehrotra, the company has grown to employ over 53,000 people globally. The ownership structure is dominated by the free float, which represents 99.7% of the shares, while closely held shares make up only 0.3%. This high level of public float indicates significant liquidity and exposure to institutional fund movements. The capital structure is a point of notable strength. Micron holds over $10 billion in cash and equivalents against a debt of $12.9 billion. This resulting enterprise value of $440.6 billion is closely aligned with its market cap, highlighting a well-managed balance sheet. For investors, this structure provides the financial flexibility to continue investing in advanced DRAM and NAND technology. The income statement reveals the explosive scale of Micron's growth in the most recent quarter. Total revenue for Q1 2026 reached $13.4 billion, representing a significant 20.7% increase compared to the previous quarter. Gross profit remained exceptionally strong at $7.4 billion, while operating income reached $6.3 billion. After taxes and other adjustments, Micron reported a net income of $5.6 billion for the quarter. These figures highlight the company's incredible ability to generate high-margin revenue as demand for high-bandwidth memory continues to surge. The visual data shows a clear and steady quarterly revenue climb, reflecting the company's success in capturing the AI-driven hardware cycle. For investors, the key narrative is the rapid translation of top-line revenue into significant bottom-line profits, demonstrating powerful operational leverage. When we examine the revenue-to-profit conversion, the efficiency of Micron's business model becomes even more apparent. The waterfall chart shows that while costs of goods sold and operating expenses are significant, the company is successfully retaining a large portion of its revenue as net income. The net margin percentage has seen a dramatic upward shift, reaching nearly 39% in the most recent quarter. This performance tracks the rapid acceleration from previous quarters in 2025, where margins were notably lower. This expansion in margins is a primary driver of the stock's valuation, as it signals that Micron is moving into a high profitability phase of the semiconductor cycle. For analysts, the focus remains on the company's ability to maintain these best-in-class margins as they scale production of next-generation memory products. The successful conversion of massive revenue into $5 billion of quarterly net income is a powerful indicator of fundamental strength. Breaking down the revenue by segment and geography, we see the diverse engines driving Micron's results. The cloud memory and core data center business units remain the primary contributors, reflecting the intense demand from cloud service providers and AI server manufacturers. The mobile and client segments also show steady performance. Geographically, the United States remains the largest single market for Micron's products, followed by significant contributions from Taiwan and China. The other Asia Pacific and European regions also provide a balanced international revenue stream. This global footprint allows Micron to capture diverse spending trends across the technology landscape, though it also exposes the company to geopolitical and trade-related risks. For investors, the strength in data center and cloud-related revenue is the most critical takeaway, as these high-growth sectors are expected to remain the dominant drivers of memory demand for the foreseeable future. The EPS and revenue snapshot provides a look at Micron's recent outperformance versus analyst expectations. In the most recent quarter, the company reported an EPS of $4.8, beating the 3.6 estimate by a massive 7%. Revenue for the same period reached 13.4 billion, surpassing the 12.1 billion forecast. Looking ahead to the next report date on March 18, 2026, analysts are already raising their bars with an EPS estimate of $8.1 on revenue of nearly $19 billion. This beat and raise pattern is a primary driver of the positive sentiment we've seen in the stock's valuation. The long-term forecast for the remainder of 2026 and into 2027 shows a projected continued climb in profitability, reflecting the market's high expectations for the company's performance during the current technology upcycle. This consistent delivery of results building shareholder confidence. The estimation accuracy charts visually confirm Micron's track record of outperforming Wall Street models. For both revenue and earnings, the actual reported figures, shown in green, have consistently landed above the estimated circles. This persistent gap highlights a conservative bias in analyst models, or more likely, a company that is executing much faster than the professional community anticipated. In the most recent Q1 2026 report, the beat was particularly pronounced, with EPS coming in nearly $1 higher than the consensus. This history of accuracy, or rather the history of positive surprises, is a hallmark of a company with strong internal tailwinds and pricing power. For investors, this chart is a reassuring sign that management is under-promising and over-delivering, which often leads to sustained stock price appreciation as the market repeatedly recalibrates to higher levels of profitability. Seeing the green dots move progressively higher confirms the strength of the current upcycle. Looking at key valuation ratios, Micron's stock currently reflects its leadership position in the semiconductor sector. The trailing price-to-earnings ratio, or PE, stands at 35.0, while the price-to-sales ratio is 9.2. The valuation ratios chart tracks how these multiples have shifted over the last 5 quarters. We see a notable uptick in the PS ratio in the most recent quarter, reaching its highest level in the period. This expansion in multiples suggests that investors are now willing to pay a significant premium for each dollar of Micron sales, likely due to the company's dominant role in the AI hardware chain. While a PE of 35 is high relative to historical averages for memory companies, it reflects the market's belief that we are in a unique super cycle for semiconductor demand. For value-oriented investors, the focus remains on whether future earnings growth will be sufficient to compress these multiples back toward more traditional levels. The financial stats chart provides a comparative look at the PE and price-to-cash flow ratios over the last year. The price-to-earnings ratio, shown in dark blue, saw a massive spike in late 2024 before normalizing and then trending upward again in the most recent quarter to 21.2. The price-to-cash flow ratio, shown in light blue, currently stands at 11.woo. This relationship between earnings and cash flow multiples is critical for evaluating the quality of Micron's profits. The company's enterprise value to EBITDA ratio of 18.woo further highlights its strong operational profitability. The steady, albeit elevated trend in these ratios suggests a market that is pricing in sustained high-margin performance. For analysts, these metrics are the benchmark for comparing Micron against its peers in the semiconductor industry and for assessing whether the current stock price accurately reflects the company's future cash-generating potential. Finally, we evaluate Micron's overall financial health and solvency. The debt level and coverage chart shows that while total debt has remained relatively stable near $12 billion, the company's cash and equivalents have grown to over $10 billion. This strong cash position provides a massive cushion against their liabilities. The financial position analysis compares short-term and long-term assets against liabilities. Micron's long-term asset base of 1 billion dollars is nearly 4 times larger than its long-term liabilities of 1 billion. This massive equity cushion and strong asset to liability ratio indicate a very low risk of financial distress. From a solvency perspective, Micron is in an elite position, allowing management to focus entirely on R&D and capacity expansion, knowing they have the balance sheet strength to weather any cyclical downturns. This fortress-like financial position is a key competitive advantage in the capital-intensive semiconductor industry. Micron's commitment to returning capital is evidenced by its dividend history and sustainability metrics. The company currently offers a dividend yield of 0.00%, with the most recent payout at 0.00 WU dollars per share. The payout ratio remains extremely low and conservative at only 4%, which is quite common for high-growth technology companies that prioritize reinvestment. The dividend history chart shows a significant step-up in payouts starting in 2020 RE, reflecting management's confidence in the company's stabilized cash flows. The next ex-dividend date is set for December 29, 2025, with payment on January 14, 2026. For investors, this modest dividend is a signal of corporate maturity and financial discipline. While not a primary income play, the ability to maintain and potentially grow this payout while funding billions in capex is a testament to the strong underlying cash-generating power of the memory business in the AI era. In conclusion, Micron Technology's Q1 2026 results reveal a company at the absolute forefront of the semiconductor boom with the financial results to match. From record-breaking revenues and massive EPS beats to a fortress-like balance sheet and expanding operating margins, the fundamentals are incredibly strong. While valuation multiples remain at a premium, the explosive growth in cloud and AI-related memory demand provides a powerful tailwind for the foreseeable future. Micron is no longer just a cyclical memory player. It is a critical infrastructure provider for the next decade of technology growth. Thank you for joining us for this deep dive into the numbers. Don't forget to like, subscribe, and hit the notification bell so you never miss an institutional-grade analysis of the markets. We'll see you in the next analysis.